Well, hello, friends, and welcome to the From Busy to Rich podcast, where we help financial advisors grow their businesses beyond the products they sell and the assets they manage to increase profitability and reclaim their time by providing strategies and insights that hopefully not only change your life, but practice. Wes, it's great to see you today, and I'm super excited about today's topic because it's one of those super critical, but also like a sensitive nuance within our industry. And so I'll let you kick that off and tell a little bit about where we're going today.
Yeah. So, what we're talking about here, I think is best kind of unpacked in the old story of the two shoe salesman. And so you've got these two shoe salesmen, and they are going to go to an island to expand their enterprises. And so they go over there separately, two different companies. And at the end of the day, surveying the landscape, like seeing what the options and opportunities are, the first salesman sends back a word home. He said, "Bad news. Nobody on this island wears shoes. I'll be back tomorrow. Stop production today." The second salesman sends back word. He says, "Great news. Nobody on this island wears shoes. Double production. I'll be staying a month." And what I love about the mindset here, Justin, is I think that people tend to view things sometimes by choice, but oftentimes by default. They view things as a problem to avoid rather than an opportunity to seize. And I think when it comes to our topic, dancing with taxes is kind of the way I would describe it. This is one of those things that's so overlooked in our industry. And I think it's overlooked for several reasons, which I'm going to explain. But tax intelligence and coordination, I think, is one of the greatest untapped opportunities, just like going to an island where nobody's wearing shoes and you're a shoe salesman. Because this is something that affects all of our lives. For our clients and that we want to work with, taxes are one of the single largest compressors of profitability than anything else. And what's interesting is most advisors are not even dancing this dance. Like, they don't know this dance exists. And if they do know, they're not very good at it. And I think you can go through kind of a couple categories of advisor. One, let's go with people who are supposed to know things about tax, which is the CPAs. That now their focus most of the time. This is not all of them. We know some great CPAs that this is not their focus, but just how the industry trains them. Most CPAs are focused on tax preparation, not proactive tax planning. And
Sure.
You know this, Justin. We work with tons of CPAs of varying shapes and sizes, and I mean, it's here comes April, here comes October, here comes April, here comes October, right? And if you want something done after the deadline 15th, you're not going to get anything done because they go on vacation and they don't come back for a long time. And so I think you've got that. I think then you've got most advisors in our business. They inherit a model to doing this work, right? To whatever door they came in, whether came from a wire house, or maybe you came up through a large insurance company. And most advisors, the only tax intelligence they have is connected to getting them to money they can manage or products they can place. But the tax code is something like 77,000 pages, depending on the font size you use. And there's a whole lot more in there that if our mission, our vision with our clients is to inspire them to increase profitability and quality of life, taxes is an enormous opportunity that has a whole bunch of stuff in there that can repurpose money at 37% before we even think about state income taxes back to our clients' retained earnings, thus increasing profitability, quality of life that may not be directly connected with the product you manage or a product you can place or money you manage. And so I think that the other thing here, kind of the third thing, and I want to get your thoughts around this before we dive in, is I think that most advisors, when it comes to tax, they put it in their hard pile, meaning they're like, that's complicated. It seems like it would take a lot of time to really understand it. And I don't even understand my own return. So they don't ever take the time to really do the things necessary to become tax intelligent. In fact, our clients, most of them, their tax intelligence is the same as it was when they first started out in business, because initially the tax burden wasn't that big because they weren't making enough money. And their whole focus was, I need to get good enough at something, some trade, skill, business, to where I'm paid a big enough income to where taxes are even relevant. But then what happens is over time, 10 years go by and 15 years go by, and all of a sudden the tax burn is enormous but their tax intelligence and tax strategy is still the same as it was when they were first starting out. So your thoughts on that?
Yeah, I think it's such a critical point in our industry in particular, and just such a unique opportunity that, to your point, a lot of people, it's either difficult because we goes back to our normal new conversation, right? Like when it's a lot of new and it's outside your normal, it becomes challenging, not necessarily that it's beyond your capability of understanding, but trying to integrate that while the plane's already up in the air becomes really difficult. And so if you don't have the systems and things that we talked about previously about how you can integrate it and gain the knowledge and capability, then you're never going to do it. It'll just always seem daunting. And I think the other side of that is fear. This ends up being one of those topics that a lot of advisors are just afraid to talk about. And I think this goes back to because they never normalized it, because they never brought it in to see how can we talk about it from a tax intelligence plan in a way that isn't going to get me into trouble when I talk about potential strategies, because that's where the fear comes in. I don't want to get in trouble. I'm not giving tax advice. And that's not what we're talking about here. We're not giving tax advice. It's how can we be curators of good ideas to find potential opportunities as part of real holistic planning.
Yeah, no, totally true. This is all about being tax aware and being able to point out massive opportunities to coordinate tax planning with the CPA to make sure the job gets done. And, this falls right into our process. And we've been going through our process here, which our business is all about unleashing human potential through clarity, strategy, execution. And we've been going through how we dissect our process from the onboarding side, that location phase, to expectation phase, where we define our relationship with the client. And then that's where also we let them know what the investment in annual retainer for this engagement would be, and give them an idea of what planning actually is. Planning is a verb. It's an activity we engage in. It's not about this plan that I give to you. And then we start diving into the direction phase of things. And direction's where we start picking a path, because there's hundreds of thousands of planning ideas and combinations of them out there. What makes the one the best is totally dependent on what the client's situation is and their unique desires, because we believe meaningful financial planning is about the alignment of the use of capital. Capital has an asterisk. It's time, talent, energy, and attention with what you really care about. And so it tends to fall in these categories. And, several weeks ago, we went through what's a direction phase meeting like when it comes to accelerating the velocity of your family bank? And then we spent the next section talking about accelerating family heritage. Big difference between leaving just an inheritance or leaving a heritage with that inheritance. And we kind of go through all the what if scenarios and how it actually makes it fun during your life to talk about some of these things, and actually makes you better at doing life when your plan is not just to leave an inheritance when you die, but a heritage while you live. And so we had great discussions around that. But then this is kind of that other big area, that third big area, which is going to be accelerating tax intelligence. And so what we do here, and we're going to give you a bunch of resources today for this. Every client of ours, from the moment we start working with them on their strategy summary, the very first one that they get, because if you guys remember, we send out strategy summaries at a minimum monthly to our clients that say, hey, what's in progress, what's upcoming, and what's on hold. But in that first one that we ever send to them, the thing that we have in there is our share link, which lets them drag and drop documents into a secure folder. And we ask them, hey, can you part of what we need is get us your last 3 years tax return. Because what that does is it gives us a kind of a level set of what do they have going on. We take those returns, we put them into Holistiplan. Holistiplan is a fabulous software that will analyze personal tax returns. And it gives you nice reports. It also gives you the ability to play around with different tax concepts and projections and see how that would modify the client's situation. But more than anything, it helps you in your own journey of becoming tax intelligent. Even if you're not charging fees yet for what you do, you ought to be getting client tax returns and just say, hey, oftentimes we can find opportunities inside of your existing tax return that we can coordinate with your CPA. Go ahead and share those with me, and we'll do a quick analysis on them. And if we find something, that'll be part of what we'll let you know. Now, for us, we're taking those and we're going to come up with an initial tax intelligence plan that we want to be sure gets coordinated with the CPA and integrated in the client's life. And so what we're doing is we use what we call our narratives checklist. So those of you who are Transform subscribers who are a part of our Transform community, and if you're not, you can go to wesyounglive.com, and you can sign up to be a part of our Transform class and community, and where we teach in depth all these things we talk about at a high level here on the podcast. But one thing you get access to are tools. And one of those tools is this narratives checklist. And this narratives checklist is an organized, kind of curated list of hundreds of ideas. And there's a whole section on tax ideas. And what we do is we just go down that as we're thinking through. We got the whole client situation. We've got their returns that we've organized. And we say, does this apply? Does this apply? Does this apply? Because it's kind of like our brains should, especially if you're going to be creating planning with the client, don't waste your brain on administrative work. Meaning, don't go, okay, what ideas are there? Then does that one apply? You have all the ideas, the hot ones that are organized. It's, hey, should they be a C Corp? Because they can pay less in payroll tax by taking them a small salary and doing distributions. And right now they're paying a massive payroll tax. It's, hey, are they doing the 14-day business rental of their home, where they're having business meetings at their home for specific board meetings, and their business can pay them for that. Business gets a deduction that passes through them personally, and then they don't pick it up as income because of 280A of the tax code. Are they paying their kids? Are they taking advantage of charitable LLCs? Are they taking advantage of different kinds of employee incentive plans that they can put away massive amounts of money? Or are they givers? Are they donating money? And there's some real creative ways that they can do the same thing, but accelerate the deduction they're capable of taking. So we've got, there's hundreds of these on there, and many more than just tax strategies, right?
Yeah.
But this is where we use our minds to go, does this apply? So Justin, I want to stop there and get your thoughts.
Yeah, I think it's such a great point. And I want to just highlight what you were just listing off. Like you talked about, should they be a C Corp? And on the list is also, should they be an S Corp? And some of the other considerations and when does that fit in? What it's not, for those of you listening, it's not, should they backdoor a Roth IRA? Like it's not, hey, we should maximize our defined benefits plan. While those things are absolutely a part of good financial planning, it is those are table stakes.
Yeah.
Everybody in the wealth advisory world is looking for those types of things because you directly, if you're doing just fee-based money management or wealth management, you're looking for those opportunities to help the client short and long term. When we're talking about true holistic planning, now we're talking about gaining and adding in tax strategies that aren't going to necessarily have a potential immediate impact back to you as the advisor. It's not something you're necessarily compensated for, unless you're charging a fee for your ideas that you can curate and look for opportunities to then coordinate with the CPA,
right?
And the CPA help implement if that's what they're going to go with. But it's different. And this is a change in thinking because this has always been such a sensitive area and a difficult topic to go into unless you had that background.
Hey, thanks for tuning in to From Busy to Rich. If you're listening and something sparks a question or you just want to explore these ideas further, visit us at wesyounglive.com or email us at info@wesyounglive.com. You'll find free resources, tools, and ways to get in touch. We'd love to hear from you.
I love that. And, guys, look, the table stakes stuff, of course, you're going to have that as a part of the overall game plan. But this is stuff that most advisors are not dancing this dance to things other than that. So we go through there. Anyway, we outline this, all the bullets we think apply. We typically have another direction meeting with the client just to let them know, hey, here's what these things are. And usually they've already heard them from us, probably some of them, at least in the expectation phase when we were demonstrating those ideas. And then we say, now, let's make sure these get coordinated in and your CPA understands what we've got going on. Most of the time, these are very black and white things. CPAs, you can get some that have we always call it not created here syndrome, where if it's not their idea, they don't like it. And in which case, fine, let's get on a call with them and talk about, hey, why wouldn't we want to do this? Like, help me understand. And maybe they've got a reason, too. So again, sometimes it doesn't fit for a reason we didn't know about, that the client didn't. But most of the time, the CPAs, honestly, when we're saying, yeah, the client's like, here's all the stuff that I'm taking advantage of, they're like, oh yeah, that works perfect. And oftentimes the client's like, well, why didn't you tell me to do that? because it is not their role. I'm going to tell you, CPAs, they will file your return. It'll be compliant. It'll be on time. If you ask them questions, yes, but they don't spend time like learning your whole story at a deep level to then say, all right, what can we take advantage of that other clients? I mean, we're looking at hundreds and hundreds of fact patterns here. Other clients are taking advantage of that is clearly in the code. And generally they're like, yeah, you can do that. So we create that plan. And then here's the other thing is every year we're going to do our fourth quarter strategy session. And that fourth quarter strategy session, we're again going to use Holistiplan. And we teach this, we have videos on it and Transform, where we're rolling through a side-by-side saying, here's where you were last year, all your incomes. We send them out a little letter in advance or a little email in advance that says, hey, give us here's kind of where your income was made up of last year. Do you see any changes to this year? Sometimes they get it to us in advance. Sometimes they don't. And that's fine. The inspiration's the deadline, we often say. But in that meeting, we can do a side-by-side and say, okay, here's your projected. If you do exactly the same thing you did last year for 2023, for 2024, or for 2024, for 2025. And then we get them to give us update. Now, they go, oh, Wes, I am going to make a little more money this year in distributions. Or, hey, I did add a piece of real estate or whatever it is. But then real time, we can go back through their tax intelligence plan and say, all right, did you apply all these things? And they're like, yes. Literally, you can put that into Holistiplan to show the amount of tax savings that creates for them. And then you can decide, is there anything else out there that would make sense that we want to do before December 31st is over? And again, using your checklist, clients absolutely love it. The side benefit of all this, by the way, you do this long enough, and this one thing that you're doing is going to make you asking for referrals irrelevant. Because every year we get a ton of our new clients because a client leaves one of these year-end meetings with us or had an initial meeting. We're doing the review of their tax return. And we just talk about a few things. And every year when we have these meetings, we get people that call us and say, you work with Tim. Tim said you just did a cool little tax review with him and that he had some really cool ideas, something about paying your kids or something about, saving payroll tax. And I'd love to meet with you and see if there's some things that we could do together. So it's great. And it's also why it's great to blend this kind of thing into when people ask you the question, what do you do? Let's say you're in the marketplace somewhere at the gym and naturally it comes up, hey, what do you do? You just simply say, well, you know how it's easy to have a lot of your profit disappear to the tax system? To which everybody we want to work with says, yep, I know exactly what you're talking about. I say, well, we help people with things like that. We own a financial planning practice. We work with people that own businesses to help them unlock financial opportunities. And then we can go on. Again, we're going to do a whole podcast on this. But I mean, how much more exciting is that than, hey, what do you do? I'm a financial advisor. I'm money manager. And for your clients to make you become referable because you've given them amazing ideas that are fun to talk about. You know what nobody talks about at a party? You should see my diversified asset allocation, right?
Or you should see my estate documents.
My estate documents are so awesome. Yeah. Nobody talks about it. But you know what they talk about? Hey, this really cool idea where you can save a ton of money in taxes is by renting your house, your business rents your house for 14 days. Or, again, the litany of different ideas. So tax ideas travel. And so it's a great way. So I kind of give you some other tips and tricks here. So because you can listen to that and you go, okay, so those are the things you do. We also, before the client files their tax return, they send us the draft. We put it in a Holistiplan. We just go over it one more time and go through, use that narrative checklist. But you might be saying to yourself, but how do I learn all this stuff? How do I go to learn it? Well, one thing you could do is join the Transform community. Enroll in our next Transform class that's coming up. Because not only do we talk about these things and give you specific examples, but we also give you a whole narratives checklist of tax ideas. And that checklist is hot linked, many of the strategies on there, where you're like, what is 14-day business rental a home? Well, you click the link and it's going to be me in a 2-minute video explaining how I would explain it to a client. And there's lots of them in there. And I'll get to some side benefits of that in a second. Other ways you can get good at this is you should listen to the Small Business Tax Savings Podcast. My friend Mike Jezishek, who's a frequent participator in Transform in our community, he has you can go to the Small Business Tax Savings Podcast, just put it in, Google it. And not only is the podcast free, you can get it anywhere that podcasts are, Apple or Spotify as well. But every week you're going to listen to some really good tax intelligence ideas. And you do that for a year, it's amazing what's going to happen in the way you think and the opportunities that you see that you just don't see right now. The other thing is that he's got a whole tax elm, a whole basically a community where you can enroll and get tax questions answered that you had. There's lots of good white papers in there on different tax concepts. And there's a bunch of tax training in there. So that's a great one. The Bradford Tax Institute, I recommend you go there. You can subscribe to their newsletter, and it's got a whole archive full of ideas. You can search ideas. Every month, you're going to get a breakdown of ideas. And here's the thing, guys, tax code changes all the time. So new ideas pop up, old ones go away. These keep you up to date on that. And both of them are great resources that you can dig into. A couple other ones, using AI. So Claude AI, Chat GPT. If you don't know an answer to a question that has to do with tax, put it in there. Or if you're reading a tax return and you don't understand, where would I find where the depreciation on their real estate is being taken on a tax return? Where would I see if it's carrying they have carryover losses that are being unused? And you type it in there, you're going to get an answer. Now, I'd also recommend when you do that. I mean, I would always say, can you please cite your sources? Because sometimes it's the sources of like, yes, I found this off a guy from TikTok. And not that TikTok's not always the bastion of truth, and some true things may be on it, but you want it to be rooted in like ultimately, where is this at in the IRS code? Like, wait, give me cite your sources. So don't just trust it carte blanche, but it's a really good tool, Justin. And before I move on from that one, just your thoughts on that.
I think it's like anything else, finding a way to integrate different components, technologies, resources that are available. First, you got to be aware of it, but then two, spending some time, again, integrating it back into your normal, because it's going to be new. It's going to take some time, but it's such a key element and opportunity that will dramatically increase your efficiency and capability. So why wouldn't you want to do it? It's one of those things like somebody tells you should probably exercise and eat a little better, but why don't we do it? And it's because it's new, different, or difficult.
Yeah.
So there's a combination of things. So it's just looking at finding a way to do it, starting here if you don't have anything else at these different things that that you're talking about right now. And those of you who are listening, I highly encourage you. We'll have links in the show notes. Go click on them, take a look, sign up for the ones that seem immediately relevant, and then from there start to build out. But it's just starting a point, because like you said, that you can look at the Internal Revenue Code as a problem or an opportunity. Really, it's a playbook of how to minimize legally your tax implication or liability.
Absolutely. And here's a great way to start, because the as we said earlier, the inspiration is the deadline. If you were to go to your existing client base and you said, "Hey guys, we have started doing this for all of our new planning clients. We're going to go ahead and get you pre-booked for a fourth quarter strategy session," and you go ahead and book it. So we have these. We book them from at the beginning of the year. They get their mid-year scheduled and they get their year end. But you let them know. And in that session, what we do is a projection based on where you were last year. What's your income going to look like this year? And we just think, is there any opportunities that we need to take advantage of from a tax standpoint before December 31st is over? And so you're going to have these booked. I mean, who would say no to that? Who's like, yeah, I don't want to pay more taxes than I need to. So you do that. Set 20 of them. You already have a great fourth quarter planned, right? If you set 20 of these out there, and say, hey, and send me. So go ahead and send me your tax returns. Go get your holistic plan. Upload that into a holistic plan, and you can have time to be getting your mind set around the Small Business Tax Savings Podcast, and you can enroll and take Transform. But the best part about all this is if you do that, it forces you to become more tax intelligent because you've set a meeting for that purpose. and you're going to start reviewing tax returns, which is the way you review your own. Put yours into Holistic Plan. But I would recommend you set. And you start wherever you want. I would try and make it a goal of setting 20 fourth quarter strategy sessions for this purpose, and get them on the calendar, and then begin this process every week of getting more and more tax intelligent. I'll leave you with this, Justin, then I'll hand it back over to you. This is just like the salesman. You can be salesman 1 or salesman 2. You can be salesman 1 that saw everything out there. This is a big problem I want to avoid. Nobody wears shoes here. Or the other salesman is like, this is a big opportunity to seize. Nobody wears shoes here. Well, guys, in our business, we have shoes to sell on an island of people with no shoes, because nobody's doing this. Very, very few. It separates you out. It makes you very unique. And it honestly is going to add a massive amount of profitability and ultimately quality of life to the clients that you get to serve.
Yeah, and selling shoes to an island of people with no shoes is a lot better than selling shoes to an island of people with no feet. So
there you go.
With that, we hope you really enjoyed today's episode. And we encourage you, again, go check out wesyounglife.com, ton of additional resources, and hope to have you next time. Thank you for listening.